Hi, this is Daniel, and this is April 9th, 2026 daily review of E-mini S&P 500 futures. I trade Albrecht style price action on a 5-minute chart. And yeah, let's start. Looking at context, we saw that yesterday was trading range from a large gap up. When we gap this high due to news, markets tend to be confused, resulting in yesterday's trading range. Today continued that trading range. We actually see a wedge formation. First, second, third push on the open. So we still have trap bulls up here. This is the first target. Market opens. Trading range, bear bar. Bull, breakout, 2 bars. Large wicks on the top, confusion. Big bar down. Lack of follow through, reversed by bar 6. Double top on bar 8. Decent 2-leg bull trap. Entering on a stop below bar 8. However, if you look at electronic hours, see a clear trading range continuation of yesterday. Furthermore, we're in a slight uptrend, so not a bull trend, but a trading range that is shifted, that is biased towards the bulls, with higher lows and higher highs. So we have this small trading range, broke out, 3-bar micro channel, confusion, first push, second push, third pushes, wedge, failed breakout, decent entry, 16, stop above 16 for the bulls, failed breakout entry, pullback, testing the highs of bar 3 and bar 8, testing this double top, testing the top of relative highs and of up here. This is a natural magnet for the trap bulls from yesterday. We tick that with bar 23. We pull back. So you break out of this trading range and up here, breakout pullback, first entry long. Decent setup, but I wouldn't take it because we're at the top of a wedge. We have the true breakout, inside bar pullback. I entered on the close of bar 28. Outside bar signal bar with my stop at the breakout point. Targeted originally a 1-to-1. When you target for breakout of trading ranges, you usually want to go for a measured move. So there's a few options here. We have these relative highs. We have these relative highs. Or a measured move would be at this 2 level. But more accurately, it would be with yesterday's trading ranges around here, with yesterday's low around here. 1, 2. 2 is the measured move around here. Now if we zoom out and we take the highest point, be a little more accurate, and take this low, and with this low around here, you see that the measured move of yesterday and today's trading range is around 72.75, which we achieved today. So those are the obvious targets when we see this breakout of bar 25 and a pullback and a continuation. So I took this long. And now after the breakout phase, we devolve into channel / trading range. We make 3 higher highs, 34, first entry long. Too hard to buy because there is a pretty large wick over here, and we already met the target of the measured move. So it's hard to buy on this outside bar. First, visual second entry long, 2 legs, decent buy. But 40 is a bad signal bar, so you would have had to enter on bar 42 to close the bar 41 right here, or on the first entry trigger on bar 43. You would have likely have had to target equal highs of 0.7 RR. Second leg, third leg up. We have a decent reversal bar. You could take a first entry stop right here. But your target would be the top of a wedge. So at this point, bar 48, 49, you already draw your wedge pattern and figure out, okay, what's the likely resistance of this final push up? Now, I wouldn't take this necessarily, but you could. We wedge, pretty big, bull bar 50, but there's no follow through. Second attempt, no follow through. We have 55 give up bar, trapping the bulls up here. So we have trap bulls here, which is a natural magnet. We have people trapped out of the first entry long, right here. Another natural magnet. But let's look at bar 55. Huge bar, reversing, but there's no follow through. It's chopped up, triangle wedge, final flag, and from the most recent important swing low, we draw a line for the bottom of the trading range. Now, we do break out, but we pull back, and then first push, second push, third push. 4 pushes perhaps, false breakout, or failed breakout, right? First leg, second leg down. And bar 62 is my signal bar. I entered on a limit order on bar 63. It went down, chopped her up, and I got the follow through. Now, where else could you have entered? Could have entered a first entry. If first entry higher low, 65. Could have also entered any of these bars, to be honest. But I entered pretty early. Now we also had 1 push, second, third push. So wedge, failed breakout, and context is pretty good, right? We have a bull spike and channel. And now we're in a trading range phase. Targets originally was the breakout point. This was my first target for all my contracts. I had a second target on a bar 50 close, but at this point it was 12:30, only 1 more hour of the session, or even less than an hour. So it was unlikely that we were going to go up there. So I closed all my contracts at 12 points. I was in for 8 MES. And yeah, we have 1 push, second, third leg up, first, second, third, complex wedge, and we go down. Could you have entered on first entry? Pretty decent. We have EMA. Definitely could have scaled in. I chose not to. But if you missed this move, the market did give you a chance to enter. 72, stop of 71, stop order. In terms of shorting up here, we're in a bull trend phase. Hard to short. Even this first entry short with a wedge, still pretty hard to short this one. In terms of the best trades, this short is okay. This short is okay, but the sizes of 21 and 22 is just too big to be taking a first entry. You would have to be careful, and you would have got stopped out. This false breakout, failed breakout anywhere here would have been good. Breakout pullback. First, second leg, confirmation. And this wedge, bottom of trading range, with a reversal bar of 62. Decent long setup. Probably the best setup of the day. And yeah. The large time frame, we saw that our trading range has met the measured move. Plays out. And yeah. That is my analysis of today. Thank you. And see you tomorrow.